You've been watching semiconductor stocks climb for months, wondering if you missed the boat on companies like Broadcom. You see the stock price hitting new highs, but you can't shake the feeling that you're just chasing momentum without understanding what's actually happening underneath. That instinct isn't wrong, it's just catastrophically incomplete without looking at the actual filed numbers. I've spent years translating corporate earnings from financial jargon into plain English, and let me tell you, Broadcom's latest SEC filing tells a story that most people are completely missing. When I opened their most recent quarterly report, filed with the SEC for the quarter ending May 3rd, the first number that jumped out wasn't just big, it was telling a story about a fundamental shift in their business. We're talking about $22 billion in revenue, which represents a 48% jump compared to the same quarter last year. But here's what nobody's talking about, that percentage doesn't tell you if this growth is speeding up or slowing down. Let me walk you through what's really happening here by looking at the trend over the last 5 quarters. This is where the story gets interesting. Starting from February 2025, Broadcom was pulling in $14 billion in quarterly revenue. The next quarter hit $15 billion, then $16 billion, then it jumped to $19 billion, and now we're at $22 billion. That's not just growth, that's acceleration. Each quarter, they're not just adding revenue, they're adding it at a faster pace. This pattern suggests something fundamental changed in their business model, not just a one-time boost. But the revenue story is only half the equation. We need to see if they're actually keeping any of this money as profit. Now here's where most investors make a critical mistake. They assume high revenue automatically means high profits. Revenue is just total sales, like the gross amount a store rings up before paying for inventory, rent, salaries, and everything else. What we really need to know is the net income, that's the actual profit left over after paying all the bills. Unfortunately, the SEC filing I'm looking at doesn't break out the specific net income number for this quarter, but we do have something arguably more important for shareholders, the earnings per share, or EPS. The diluted EPS came in at $1 per share. That means if you owned 100 shares of Broadcom stock, your portion of the company's quarterly profit was $191. But there's a detail about this EPS number that changes everything about how we should interpret it. Here's where the market's reaction becomes part of the story we're trying to understand. The stock is currently trading at $420, and it's up 13% just in the last month. Now, I never tell people whether to buy or sell, that's not what we're here for, but I can tell you what these numbers suggest about investor sentiment. When you see a stock jump 13% in a month around earnings time, it usually means the market liked what they saw in the numbers we just walked through. The combination of accelerating revenue growth and solid earnings per share creates a narrative that growth investors find compelling. However, there's something about the broader context that we need to address before drawing any conclusions. Now here's the part that most earnings breakdowns completely skip, and it's crucial for understanding what you're really looking at. These numbers I just shared with you, this $22 billion in revenue, the $1 EPS, these come straight from Broadcom's SEC filing for the quarter that ended in early May. That means this data is real, it's verified, but it's also reported on a lag. The company may have already reported newer numbers in their latest press release, but what we're analyzing here is what's officially on file with the Securities and Exchange Commission. This distinction matters because SEC filings are audited and verified, while press release numbers are preliminary. What we can say with certainty is that through early May, Broadcom was executing on a growth strategy that was clearly working. Let me pull this all together in a way that actually helps you think about this company and others like it. Broadcom's latest filed numbers show a business in clear acceleration mode, revenue growing not just in absolute terms but at an increasing rate quarter over quarter. The $1 per share in earnings shows they're converting that revenue growth into actual profits for shareholders. The stock's recent 13% monthly gain suggests the market agrees with this interpretation. But remember, past performance doesn't guarantee future results, and these numbers represent a moment in time, not a prediction about what happens next. The key is understanding what metrics to watch in their next quarterly filing to see if this trend continues or starts to level off. Look, I've given you the real numbers straight from the SEC filing, but this is education, not financial advice. Your investment decisions should be based on your own research and risk tolerance. If you want to dive deeper into earnings analysis and learn how to read these filings yourself, check out nexusaicalls.com, where we break down more companies just like this. The goal isn't to tell you what to buy, it's to help you understand what the numbers actually mean so you can make informed decisions on your own.